Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 9 minutes till 9 a.m. Eastern Time on Thursday, September 18th. So, looking back at yesterday's session, right, we finally had the FOMC come out, and you can just see from just looking at the candle bodies on the 30-minute charts that there was just, rejection of prices under basically 24,380. You can kind of look at that level going forward too as a level that the bulls need to maintain above, and 66.45 for the ES. Um, if you look at that low was made right around 10 till 3 yesterday, so about 40 40 50 minutes after the news came out yesterday. And then as we look at where we're at, right, we had that wick down, uh, took out the few days of trading, almost filled the gap, but not quite, right? And then missed by about 5 points there or so. And then as we look at, and I said this yesterday in my morning trade plan that, the best, I gave you a couple of possible scenarios for some great trade setups. One of them was a quick flash down into this 24,276. You had about 10 minutes to buy that level. That was a check back from the breakout from the high of August 13th, and then just went off. That was a beautiful trade, and we'll see where we go. We still have those targets above from that pullback we had earlier in the year. I'm sure Jack's watching those now, but I think it's right around 604, 605 on the triple Qs. We'll get into that here in a second. As we look at the overnight action, and with yesterday's profiles on it, we're sitting here basically uh, above value for all of the indexes. Uh, and as we look at where we're at, and again, I still think it's, as we're approaching those targets, you can be, try to get that last little bit in. But again, I'm reiterating, you should probably start taking money off of your long term holdings, right? You don't need to sell everything. You don't need to short the market, but it's time to start thinning down your long-term holdings up here as we approach those targets. Could we go up another 600 points or so in the NQ? Sure. Could we fall short of those targets and have a correction? Sure. That's probably more likely. Are we probably putting in a long-term top heading into the end of the year? And potentially for multiple years, more than likely. Uh, so I still think it's time to start, thinning out. And I wouldn't, go balls to the wall on that, but I think that you should be taking at least, 2 to 4% out uh, every, you know, 2.5 to 3 weeks now going forward, uh, and until you see that next measured move come into play, and then see reallocate your funds at that point in time. Uh, there's not going to be a bell that's rung at the top when this thing spikes out. So the overnight action, 665 in the SPY, almost to the tick here, and then you can see a little bit of rejection, but you can't really. I mean, we're still just sitting here. The NQ is still holding above the one-day expected toss move, which is not the end-all be-all. The daily call wall and all the call walls are right around 600 uh, for the triple Qs. And again, we're trading 596 almost right now. Traded 597 in the overnight. Uh, so you're kind of you know putting up there. Again, you could get up to probably I think 604, but I wouldn't look at that target for your long-term holdings to be honest with you. And then as day traders, that could be where we end up going. But you really need to start paying attention to the VIX now, because it's going to be that when someone yells fire in the crowded theater move at this point in time. Once hedges start coming on, they're going to go on uh, in full force and quickly, and it's highly likely that we close tomorrow on the lows of the week. That's just usually how this would play out. Doesn't mean it will this time, but that will be a normal OpEx. Again, the top of my videos, it's all about going into OpEx at this point in time. So I think 6,500 is really what you want to see. That's more than likely to trade in the cash market, right? We closed at 6,600 yesterday. So we're up 38 points. So that would put us, you're probably looking at about a 140 point pullback between now and Friday's close. That's going to at least trade once. And then if 6,500 does not hold, it will accelerate below those levels. I don't think that you're getting a lot. Today I wouldn't be looking for, the bottom to fall, but one thing that you can watch is the TOS 1 day expected move is right around yesterday's low. That means if we don't take out yesterday's low and start trading below, we're still one time framing higher, right? We can hit those longer term targets and whatnot. However, if we do take out those lows, right? Do you ever hear someone talk about this is a 1 sigma move, a 2 sigma move, a 7 sigma move, a 10 sigma move? Well, this is 1 sigma, right? This is the range that's expected for today. Uh, 2 sigma move would be, another whole block down. 3 sigma moves would be 3 blocks down, right? You get my point. So as we get down to here, and we do get those moves occasionally, I'm not calling for it to happen today, uh, but you have to be aware of what it looks like when it does start happening. And normally, when we do get a pullback from here, you're going to take back, we've been one time framing higher, you're going to take back about 2.5 weeks all in one day of up moves. Um, but what you want to watch is the VIX as we approach, if we do start approaching these lows, there's no, until you get below 24,563 and start holding, right? That's basically uh, right around yesterday's bell high. Until we get above there or below there and start going, right, there's no guarantee that we're even going to sniff yesterday's low at this point in time. So, but if we do, you got to watch the VIX, and it should be, if you're going to start having a chance at a 2, 3, or 4 sigma move to the downside, the VIX is going to have to be getting a bid feverishly, which it could, this front month on the VIX is a thin contract now. It just rolled over. So I like the downside between now and tomorrow's close, to be honest with you. Uh, I like, targeting right around 6,500 as a test. Again, that's going to be about 140 ES handles down. It may not play out, but what you want to see is you want to see structure start shifting that way. You want to see, uh, that poor structure hold. And you've got to watch the positioning, right? Each of these $5 strikes, you need them to turn it into resistance instead of support. Right now, they've been crossing over and becoming support. So keep playing, the upside as long as we're staying above these levels. But be aware that once the downside starts, it'll probably be, you always have that thing that you could get that fast down, right? Like yesterday and back up. But remember, everyone's watching yesterday's lows now, right? Everyone's got their stops under there. And luckily for us day traders, again, if you look at the charts, you've got those positions, right, that we can look at, and we know that the warning is it's way above there, right? It's way above yesterday's low. Again, the warning for, breakdowns potentially is below 24,380 and below 66.45. Uh, it's thinly traded down there. into yesterday's close. That's your bogey mark, and for the kind of a going into a normal OPEX. I hope this helps. We'll see what Jack's looking at next. And again, uh, you know, I think you can cautiously try to play the upside, going into those bigger targets at 604 or whatever on the Qs. That would still be about 750 points. I'm sorry, that would be right around 450 points higher than we're currently trading on the Qs. So you're looking at printing 25,100 potentially on the NQ. So we'll see if that's in the cards. It might not be in the cards until next week, right? We might get a little bit of a shakeout down to that 6,500 level, and then go up, hit those targets, and then roll over. That would be more on par, but we should be weak going into Friday's close from here out. I hope this helps. You guys have a great day, and we'll see what Jack's looking at next.